All right, well, we'll get started. Firstly, thank you all for being here. I'm going to be recording this just so we have it available if you guys got to hop out or want to share it with any of your colleagues or friends, whomever might benefit from this information. That is the sole purpose of why we're doing this, is just really to provide as much education, try to clear up some misconceptions and misinformation that's going around, and be a resource at the end of the day. And so thank you. The focal point of what we're going to be doing today and going through is really touching on the Paycheck Protection Program. It's one of the new programs under the CARES Act that recently was announced by the government through the stimulus package. There are some other programs as well that we can touch on as at the end, as it has some impact on this program as well. And I just want you to understand the differences so you can make the best decisions possible, whether for your business and your financial life. You know, just a quick little disclaimer, like, this is unprecedented times. Things are changing rapidly. The information that we had on Monday regarding the program changed on Tuesday. And it's likely going to change in some way, shape, or form as well. The SBA has been given essentially until April 27th to provide clarification to all of this guidance. So as it relates to some of the information that we are going to discuss, it might change between now and next week or the end of the month. So we just need to be prepared for that. So the information is really just our interpretation of what we've seen, what we've read. We're trying to stay abreast of this because it's impacting, you know, a lot of our clients, a lot of our family, a lot of our friends. And so, you know, make sure that you take this information, review it with your CPAs, your financial advisors, your attorneys before going off and making any, you know, major decisions. So that is what's happening. So basically, the Paycheck Protection Program, this is the big daddy of all the recent government stimulus as it relates to business owners. It's a government program. It's set up to aid small businesses and their employees through this crisis. So it's providing $349 billion of money allocated to this program. Other programs related to small business are a fraction of this, maybe $10 billion or $17 billion. So this is where the money is, and this is what we need to really follow. So what the Paycheck Protection Program is going to do, it's going to provide loans to business owners and businesses that can be forgiven after certain criteria is met. So depending upon the business, that means every dollar potentially that the government may give you could be completely forgiven. And if not, it will be converted into a loan, which we'll touch upon in a little bit. But that forgiveness aspect makes it potentially very, very powerful. It's as if the government might give you money and you never need to pay it back. It's just giving you money to remain afloat and keep your employees hired. Excuse me. So who can get this loan or, you know, be a part of this Paycheck Protection Program? It's available to businesses with 500 or fewer employees. That can be S corporations, that can be independent contractors, it can be partnerships, sole proprietorships, and certain nonprofit organizations. So it's pretty widely available to just about anybody. And restaurants and hotel entities are also eligible to apply, even though that they might have over 500 employees, a restaurant group. But if they have different locations, it can be broken down, that 500 number, by location. So many of all, you know, many businesses, especially our friends and family who run businesses, could be applying for this program. And so let's talk about some of the details of the program, which makes it even more enticing for business owners. Some of the other lending programs require you to put up collateral, require you to, you know, have your house on the loan as a backup if you cannot repay this loan. This Paycheck Protection requires no collateral and no personal guarantee. So pretty powerful in that standpoint. And in order to receive the loan, You need to just certify that current economic uncertainty makes the loan necessary to support your ongoing business. It's not asking, did you lose half of your revenue or 90% of the revenue? It's really, this economic uncertainty is impacting your business. That's a certification standpoint. And I don't know too many businesses who aren't being impacted by this. I know that there are some that are countercyclical, but many are being impacted by this economic uncertainty. Excuse me. And you also need to certify that the funds are going to be used to retain your employees, to maintain your payroll, to make your rent, utility, or lease payments. That's really the purpose of this plan, is to use it for those purposes only. If at the end of the day, where there is a loan outstanding, if you're not forgiven on all of the loan, there are no prepayment penalties. You can just hand the government back their money at the end of the two-month period where you're being tested and using this money. You can just pay it back if you'd like, if you have the resources. And there's also no credit elsewhere tests. In some of the other SBA programs, they want to be the lender of last resort. If you can get credit from a bank or credit from another source, they're not necessarily going to give you a loan. Under this program, even if you could get lending from a bank or a business line of credit, they're still going to lend to you even if you have the access to credit elsewhere. So they're not concerned about being the lender of last resort. They will give it to you even though you can get loans from other sources. So how and when can you apply? And a lot of people are looking for information. They're getting confused. This program is not available to apply yet. So starting on April 3rd, lenders may begin processing applications. April 3rd. But not everybody, not every bank is going to necessarily have the infrastructure and systems and process in place to even take those applications as of April 3rd. But who can you apply through? Pretty much any existing SBA 7A lender can apply through, and they're also opening up to non-SBA lenders who are federally deposited, FIDC insured banks and credit unions have the ability to take on these loans and be issuing these loans. So just about every bank under the sun will be able to, are likely going to be able to provide this loan. So April 3rd is the date, that's tomorrow. And then you got to look into your specific banking relationship to see whether or not they will be accepting loans. Self-employed independent contractors, their date to start requesting funds is actually April 10th. So if you have an S Corp or a partnership or a C Corp, you can be requesting tomorrow, but independent contractors and self-employed have to start on April 10th. So I think it's a case-by-case basis as to what banks will be ready and how they will be accepting these applications. Chase, where I do my business banking, they're only taking applications online. So you can set an appointment with your business banker to start talking things through, but there's not going to be a physical application. You can't walk into the bank and you can't do it over the phone. You're going to have to be doing it online with Chase, for example. So that means getting all the information and getting organized, making sure they have your online login to be able to go through their application process online. I would be reaching out to your specific banks to figure out what their plan is regarding this program and if they're offering it. If not, you might need to find another resource in which you can apply. And Chase, for example, they're not taking on new clients. They're only going to be serving their business banking clients as of February 15th. So it's important that you start doing your work to figure out how you get in the queue, because even though it's a lot of money, $349 billion, it's likely going to be done on a first come, first served basis, which means you want to get in that queue as fast as possible to get in line to get any of benefit from this program. So that's the application. And I know I didn't say this at the beginning, but if you have any questions as we go, just put them in the chat box and we'll do our best to answer them. I want to keep this to 45 minutes with time for Q&A, at about the 30-minute mark. So that's how you apply. What's important is the loan terms and loan forgiveness. And I'm going to walk through exactly how we can estimate the forgiveness, but give you a little bit of detail. So the loan will be fully forgiven if they're used to pay your payroll costs, interest on mortgage, rent. That means mortgages and rent that were in existence before February 15th, as well as utilities. But of that money that you can use it for, 75% of that needs to go to payroll. So if your rent is half of the money that you spend, your forgiveness is going to be reduced. So that's one aspect of it. Loan payments, the amount that you actually have to pay back can be deferred for 6 months. So you don't need to start paying back the loan right away. You have 6 months. And the other thing to be aware of is there's likely going to be there's a lot of information out there. No government nor any of these banks are going to be charging any fees to do this. So if somebody says you apply to some bank or credit union and they want a fee for it, no, that's not going to happen. Maybe a CPA might say, look, he might charge you a fee to help take the time to go through the entire application, but there's no fees from the banks to apply for this loan. So very important detail to note. So there's really no cost. There's not a lot of downside to potentially getting into this program. Forgiveness is based on you maintaining or quickly rehiring your headcount, your employees. They want to make sure that part of this is to keep your employees employed over this period of time, and forgiveness will be reduced if you reduce your headcount. And we'll show you the calculation. But imagine that you had 10 employees, last February, March, April, and June, and you have 8 now. The amount of forgiveness will be reduced by the fact that you have 20% less employees. So you have the ability to rehire them, but we'll talk a little bit more about that. So that's just something to be aware of. The loan, if whatever is not forgiven turns into a loan, that loan is a maturity date of 2 years and an interest rate of 0.5%. So when the loan was first being discussed, there was an interest rate of 4% and a 10-year payback period. So whatever isn't forgiven, you got to pay that back within really a 2-year period of time. So that's something that you would need to manage from a cash flow perspective. It's not as if this is a traditional mortgage and you got 30 years to pay it back. You got to pay that non-forgiven part within 2 years. So that's also something to be aware of. And the last thing that's really powerful is the forgiveness is not taxable. So if you get $50,000 forgiven, that doesn't show up on income in your tax return. It's essentially free money to use to pay your bills or pay the existing bills related to payroll, rent that you have going on in your business. So how much can we get? This is an important factor. So loans can be for up to 2.5 times your average monthly payroll cost from the last year. I'm assuming most business owners have been in operation for the last year. There are some nuances if you've been in business less than a year in terms of figuring out average monthly payroll costs, but let's just say you've been in existence for the last year. You will look at your payroll costs, which includes some of these other details that we'll go over, and it's 2.5 times that amount is what the maximum loan can be. It's subject to a $10 million cap. That's the maximum loan you can get. And so if you are a seasonal or a new business, there's going to be a slightly different time period to calculate your average monthly payroll costs, but understand that it's 2.5 times your average monthly payroll cost in the loan. And so another important detail is that your payroll costs are going to be capped at $100,000 for each employee. So if somebody is making $150,000, only $100,000 of their payroll is included into this calculation, into figuring out what their average monthly payroll cost is into this formula. They're not excluded, but it's just capped at 100. So the maximum loan amount is not based on total payroll. It's capped at $100,000 per employee. And owner employees that are W-2'd can be included. So if you own your own business, your salary up to $100,000 is included in that average monthly payroll cost, which is a very good, important piece of the puzzle, is that we can help maintain our own salaries potentially through this period as well, based on getting that loan. So that's how much we can get, and I'll walk you through just a little example of how we calculate that in a minute. So as we go through this, there are the calculation for your payroll costs and the loan amount are different than what you can spend the loan on. So your payroll costs for the loan amount are really your salary, wages, commissions, tipped, capped at $100,000. It also includes employee benefits, vacation, paid time off costs, parental and family leave, allowance for separation or dismissal, payments required for group health insurance benefits, payment of your retirement benefits. If you have a simple IRA or a 401k, your matching contribution can be a part of your average average cost, as well as any state or local taxes assessed on compensation. For example, California SDI, that's about 1% for every $100,000 of payroll. That can be included in this payroll cost figure that you will have to add up to determine what you need to put on your application. So salary, wages, it's all really payroll related. This is different than what you're going to spend the money on. So for sole proprietors and independent contractors, you know, wages from self-employment are capped at $100,000. So kind of the same $100,000 level. So that's how you are going to figure out your, you know, payroll. So for example, just trying to put a little example together so you can figure out how can we figure out what goes into the payroll protection plan loan amount, and then how can we figure out forgiveness. So just to walk you through, let's say on average for 2019, your payroll costs average, you know, were $400,000 for the year, and your group health insurance premiums were $36,000. Your retirement benefits, your 4% company match was $16,000. It was a total of $450,000 of payroll related expenses for the year. On average, that's now $37,000 per month. You can get 2.5 times that amount. So 2.5 times that average monthly amount is the maximum loan. So this is saying for that scenario, someone could get a $94,000 loan, $94,167 PPP loan based on looking at that. So for you guys right now, you should be going through your QuickBooks, getting your financial information to figure out these figures: salary, wages, paid leave, group health insurance, your retirement benefit match, any SDI, or whatever state and local tax that there might be wherever you guys are located. And that's going to be the number that you're going to then put on your, you know, application, $37,667. You know, then you get the multiple of 2.5, which tells us the maximum loan amount. So that's how we will figure it out. So make sure your information is organized so you're ready to fill out those applications when the time comes. So what can I use the loan for? So here's a little bit different. The loan proceeds, the maximum loan amount, is really based on those payroll costs. However, once you get the loan, you can use it on all of those existing payroll costs here, but you can also use it to pay your rent. You can also use it to pay your utilities, whether it's your gas, electric, internet, phone service as well. So there's some additional costs that the money can be spent on, in which your forgiveness can eventually be based on as well. So just know that difference when you're going back to ask for forgiveness. So forgiveness, I think we need to understand, how do we figure out what forgiveness is? And forgiveness is, there's two potential ways to calculate the estimated forgiveness. You have two alternatives basically to figure out what's going to be the most optimal for you, and you get to choose. So forgiveness, I'm just going to dive into it. We need to calculate, or you need to really figure out what the full-time equivalent employees were for the 8-week period beginning on the date of the origination of the loan. So let's say I get the loan on April 15th. How many full-time equivalent employees do I have as of that date? And then I'm comparing that to the number of full-time employee equivalents that I had on February 15th of 2019 through June 30th of 2019. So if now let's just say my company I had 10 employees last year, February 15th, 2019, and now I only have 8. That means my forgiveness ratio is 80%. So I will be able to get 80% of that loan forgiven. So that's alternative 1. But then you can also figure out what's alternative 2. Let's say alternative 2 is we need to figure out our full-time employee equivalents of the 8-week period, this 8-week period that the government's letting us use this money for, and dividing that by the number of full-time employees on January 1st, 2020 through February 15th. So perhaps I already reduced headcount this year in January or February, and I only had 9 employees from January to February. Instead of using alternative 1, and now I have 8 employees, I can take my 8 divided by 9 and use that in my forgiveness calculation. So you have 2 choices. Whichever one works best for you, you can utilize. So those are the 2 alternative formulas to start to estimate your forgiveness. And I'll share this document with you after so you guys can take a look at it and do some of the calculations yourself. So additional forgiveness details. If an employee who works for you has their wages cut more than 25%, they do not count as a retained full-time employee in this calculation. So it's also encouraging you to keep people employed at their similar wage levels. So if somebody was making 100,000 and now because of this environment, they're now at 70, even though they're on their payroll, they don't count as being a retained employee. So that's going to impact that forgiveness ratio that needs to be calculated. So that's one thing to be aware of. And then you can also, they want to encourage you to rehire people that you may have let go. So they will not reduce your forgiveness related to reductions in your employment and wages that occurred from February 15th and April 26th, if by June 30th, you've actually rehired all of those workers. So let's say, for example, I was at 10 last year, I went to 8. If I go back to 10 by June 30th, 2020, my forgiveness will not have a reduction. So I can eventually rehire these folks to ensure that everything was back to the way it was before February 15th. So that's another nuance to be aware of as it relates to this forgiveness. So moving on to kind of show you the forgiveness calculation, I'm just kind of parlaying off the last information. As I don't know that I fully clarified this Payroll Protection Program is designed to give you money for 8 weeks. The money that the loan amount that they're giving you is essentially to help you for about 2 months. It's an 8-week program once you get the loan. So what do you then spend of that loan over 8 weeks? I'm just going to bounce back and forth. Remember, my maximum loan based on my payroll from 2019 was $94,000. However, fast forwarding now, let's say I get the loan April 15th. Over the next 8 weeks, if I spend $60,000 on salaries and wages, that's one of those applicable uses of the funds, $60,000. If I spend $5,000 on group health insurance, that's included. If I spend on the 401k matching, that's included. Rent, I can now include into this calculation, as well as my utility bills. So now, once I get the loan over the next 8 weeks, I spent $77,000 of the maximum loan amount of 94. So I didn't use all of the money that they gave me. So that's one thing to be aware of. Now we go to, of the $77,000 that I spent, how much of it can I estimate that would be forgiven? Well, let's just say for example purposes, I let somebody go. My current head count during this 8-week period of time is 5 employees. But last year I was at 6. So now I know that my my ratio is, 83, about 83%. So because I didn't hire back to that exact full-time equivalent, my forgiveness factor is being reduced. So I then take what I spent over that 8-week period of time, multiply it by 0.8333% and figure out, okay, here's what amount of my loan is actually going to be forgiven. $64,000 of it is going to be forgiven, which then leaves me with a $29,000 loan balance that I then need to pay off within 2 years at a 0.5% interest. So if there's headcount reductions, you perhaps may not get all of your loan balance forgiven, all of the initial loan forgiven, but you can get a pretty significant amount forgiven. So that's just how you need to figure out how to calculate and get some estimates around what your numbers might be, because at the end of the day, you then need to pay this back within 2 years. So we want to make sure that your cash flow can support that, because the other side of the equation is we might hire people back, we might pay our payroll, but what if we don't have the revenue then? What if we don't have the demand side? That's something that needs to be managed throughout all of this process, is how do we have the funds to repay this? So that's the forgiveness example and how we go about calculating it and what remains on the loan. And so then, now that we've done our estimates so you guys can map out what's best, what you should be expecting, how do you then get forgiveness? So then 60 days later, after that 8-week period of time, you're then gonna go apply through your lender to request forgiveness on your loan. You're gonna have an application process. You're gonna have to document the number of employees on your payroll and their pay rates, because they wanna make sure that you didn't reduce pay, and they wanna validate that you kept people on to the levels that you had. So payroll tax filings are gonna be required, state income, payroll, and unemployment insurance filings. Those are all going to be required on that application for forgiveness. You're going to want to document that you made payments on your leases and utilities and mortgage obligations. I know a lot of people are also in talks to defer rent. Maybe we're going to defer rent to, for a year. It's better to be paying your rent now if you're getting this forgiveness on it, because you can utilize that in your forgiveness calculation. So that's another thing to simply be aware of, is it may not make sense to defer over the next 8 weeks, because if you just defer your rent, you're going to eventually have to pay that bill. Well, here's a way to get some of that rent actually paid through this Paycheck Protection Program. So you also then will need to certify from an officer of the company that everything is true and accurate. It's just a certification process, and that you used it as it was intended. So we just need to document that you paid all these bills, that you have the proof that you hired employees and who you had on your payroll. So how do I get forgiveness? That's exactly what you'll do. You'll go back to your lender, 60 days after to request it. So that's the Paycheck Protection Program, but I also wanted to talk a little bit about, because we're getting a lot of questions regarding this other program that's also out there called the Economic Injury Disaster Loan. And there's differences between these two loans, and they have a few different impact points. So we just covered the Paycheck Protection Program loan. There's been a lot of talk about people applying for this $10,000 advance grant as well, that comes through the SBA. That is through this Economic Injury Disaster Loan Program. You can get a $10,000 advance grant within essentially 3 days of applying through this Economic Injury Disaster Loan Program. That money, though, can be forgiven and you don't need to pay it back. But if you do apply for that program, that $10,000 advance grant, and use it to pay your payroll and use it to pay your rent, essentially the same things under the Paycheck Protection Program, it will reduce the amounts that you are forgiven on the Paycheck Protection Program, because you were given $10,000 of free money through this advance grant. So they relate to one another in that basis. However, the Economic Injury Disaster Loan is different. It could give you a loan that you might have to pay back over 30 years at 3.75%. So you can do both loans. You can refinance the loans and the different type of loans, but you just need to be aware of the different terms, that if you get this Economic Injury Disaster Loan and refinance into a Paycheck Protection Program loan where there's some forgiveness, but some of it may not be, you then have to pay that loan balance off over 2 years, whereas you might want to keep this Economic Injury Disaster Loan because you can smooth out your cash flow and pay that back over a much longer period of time at 3.75%. So for some people who, if you're really in a crash crunch and need money fast, getting that $10,000 SBA EIDL advance grant can work. If you don't need that $10K right away, and you're going to apply for the Paycheck Protection Program, that's fine as well, because the money will be reduced by, if you get this, you're going to reduce your forgiveness under the Paycheck Protection Program. So you can't necessarily have both if they're going to be used for the same type of money. So those are some of the differences between PPP versus EIDL. Different amounts that you can get. This is actually a loan. This comes with forgiveness. This is a lot longer repayment period. There's no personal guarantees. There's personal guarantees on this if you get over $2 million on the if you get over $200,000 on the EIDL. So there's differences right now. You can start to actually apply for that $10,000 advance grant now. There's a really simplified application process in place to get you that $10K upfront right now. But what you get beyond that is still to be determined. The more expansive application process is not even ready yet, and you don't know exactly what you'll get. But you don't even need to take the loan and sign off on the loan at the end of the day, even once you get the $10,000 advance grant. So you have some time to figure that out. And I'll send you the links so you know where to apply for these things. So here's the payroll. I'll give you the links to the Payroll Protection Program page, the sample application, so you can get familiar with what's going to be requested through whoever your lender is going to be, as well as the Economic Injury Disaster Loan page where you can apply for that program. So that's the skinny, that's the high level. I will look through some of the questions here and ask, let me go through some of the chat and ask these questions. So what if you were an LLC but file as an S Corp? If you are an S Corp, you can be applying as of April 3rd. So you don't need to wait till April 10th to file. That's for independent contractors. So if you own a real estate brokerage firm, we have many clients in real estate. Some of them might have a team. You might be the team leader, have an S corp. Some of your employees or some of the real estate agents on your team might be independent contractors. They might not have their own S corp set up. For them, they are just self-employed as a 1099 independent contractor. They then could file as of April 10th. So that is one question. So another question is, how do you calculate your average payroll if you had 15 to 20 people in 2019 that were fired or quit? That was only employed for 2-month period of time. So that's a good question. So if they weren't part of that average, if I had 15 to 20 people, so let's go back to the forgiveness calculation. So we're gonna look at the number of full-time employee equivalents for the 8-week period now, divided by the average number of full-time employee equivalents from February 15th, 2019 to June 30th, 2019. So we need to look back to that period to figure out, that employee might not be considered in that average if they're only there for 2 months and we have this 4-month period of time. So we got to look at our payroll records to figure out, exactly what that average full-time employee was during that period of time. And there's still not complete clarity exactly in terms of what they consider a full-time employee equivalent. Will 2 20-hour part-time employees be considered one full-time employee equivalent? That very well be. They might follow the ACA, the Affordable Care Act guidelines. It's not completely clear, but that's how you would look at it, is what's your average number of full-time employees for that February 15th to June 30th, 2019 period of time. Is profit sharing or other 401k plans included, or is it just an employer match? This hasn't been clarified yet. We do have a lot of clients that have made big profit sharing contributions or defined benefit contributions, which are employee benefits. I am not completely clear yet. That's something that I'm looking for answers on, whether we can include that profit sharing component into it. My hunch is that no, because it's not a typical payroll related, it's not coming out of payroll on a weekly or biweekly basis. The match, kind of like a group health insurance benefit, is paid, daily, on a weekly or biweekly basis. That is a discretionary kind of contribution. So I'm guessing that you're not going to be able to include those, but I'm looking to find more details on that, and I'll let you know as soon as I do. How do I calculate average number of full-time equivalent employees? We have 3 full-time and about 20 part-time workers. I will do it 2 ways for the time being. How do I break down those 20 part-time hours into full-time equivalents? So if it's a 40-hour week and I have 20 people doing 8 hours a week, that might be 5 full-time employee equivalents on top of your 3 full-time employees. So I would just be prepared to look at it both ways, adding up how many part-time people equate to 1 full-time, and count those as 1 full-time employee worker. Hopefully that makes sense. So that's something to also be aware of. And the other thing, can we use money to pay subcontractors versus employees? Good question. Let's see here. They aren't calculated into your, I need to get a little bit more clarification. If you pay subcontractors now, they're not calculated into your average payroll costs. That's only going to be based on your true salary and wages. So if you pay any independent contractors, they're not part of your loan amount. You may be able to, I will follow back up to see if you can use that, you can pay them under the loan. You can use them in the forgiveness as qualified. So I'll follow up with you on that as well. So some of this stuff, like I said, it's still fluid. We're still learning new information and, trying to digest this as best as possible. Can you use money? Let's see here. Coincidentally hired an independent contractor at my firm, assuming that will be eligible, included in the amount of the loan. Let's see here. Yeah. So if you're an owner of the company and you do not take a salary and you're just a draw, you just take distributions, that will not be calculated. You need to be on the payroll in order to be part of this in the loan and the forgiveness. So that needs to be looked at. You need to be on your payroll and not just taking distributions. So if you're only taking a $20,000 salary, only $20,000 of that will be included in the calculations. If all you're doing is taking distributions and not through payroll W-2, that is not, your draw is not included or considered. So definitely want to look at that. How are average commissions calculated into employee wages? It's considered wages. So their commissions that show up on their W-2 or their paycheck is just part of your payroll calculation for the past year. So if you're looking at your salary and wages, you would include commissions paid to them through their salary and wages through their pay stubs, through their W-2. So if it's all included already on their W-2 on your payroll reports, your commissions would be included as well. So that's something to add and to figure out. But remember, it's capped. So if somebody earns $100,000 and they earned 150 because of their commissions, but their salary is only you can only use $100,000 of that salary into the forgiveness and your loan amount. So as an independent contractor, I apply for this, and then one of my clients applies and receives it. And can they pay me directly, or do I pay? Let me see here. As an independent contractor, let me look back here. So is an accountability plan payment for single owner S Corp eligible for forgiveness? Let me digest that. I might need a little bit of clarification on that. I'll come back to that in a sec. We do need to have, W-2 wages being paid for the forgiveness. That's just critical. It needs to go through salary. They're going to be looking at your payroll tax reports to determine forgiveness. So we need to have payroll as part of this forgiveness. And so it's important that it shows up through your payroll tax records. That's not going to show up if you're taking a draw. It's not going to show up if you're just reimbursing yourself. So the payroll component is very, very important. Another question here. As an independent contractor, I apply for this and receive it. Then only one of my clients applies and receives it. And can they pay me directly? Do I pay them back the government loan and accept from them? If I apply for this and receive it, then one of my clients applies and receives it. Can they pay me directly? Your loan is going to be your loan, if I'm understanding this correctly. As an independent contractor, you're going to get your loan amount based on your net income from self-employment that you then can use to pay certain rent and group health insurance premiums. There can't be double dipping per se, because your independent contractor who works for you is not on your payroll records. So that's not going to be part of the forgiveness. So hopefully that makes sense. What about employee bonuses through payroll? Yeah, that's the same thing as like commission. So that's going to show up as you're calculating your loan amount. That the bonuses that they go through payroll are part of your average salary and wages for the year, for the calculation period, and that they will also be part of the calculation of forgiveness. So if you gave a bonus during that 8-week period of time, that will show up through that that payroll tax record. So the S Corp creates a let's see here. The S Corporation creates a formal reimbursement called an accountable plan to pay employees for their business expenses, home office. That, I believe that under that saying, yes, if your accountable plan is paying rent to you, you're an S Corp and you have a home office and you pay utilities and internet, you can deduct that part of that rent through your reimbursement plan. It just all needs to be very much documented, and you need to have had that reimbursement plan in effect before February 15th. You're going to need to prove that you were reimbursing yourself last year as well. You can't just start now and get it deducted from forgiveness where you weren't doing it in prior periods of time. So hopefully that answers that question. When you are figuring out the total PPP loan, are you taking the average payroll for the 12 months? Yes. So average payroll for the 12 months, but then the forgiveness is based on those different periods of time, the full-time employee equivalents during those different periods of time. So your average monthly payroll cost for 2019 or whatever, if you're a seasonal, a different time. But then when it comes to the forgiveness calculation, you have these different periods of time, looking at the prior year's employee count from February 15th to June 30th, and then looking at the January 1st, 2020 through February 15th employee count. So average 2019 on the loan amount, but then the forgiveness side has slightly different dates. So good question. Can you apply, if you own multiple LLCs that aren't owned by each other but have common owners, can you apply for each LLC separately? Yes, but you can, they're gonna ask you on the forms, is there common ownership? Do you own any other companies? But they're also gonna make sure that you're not getting too much, based on all of the, that we're not double dipping across the employees. But yes, you can apply for under different entities, even if there's common ownership, but they're gonna wanna make sure that we're not, that we're not taking too much, getting too much for one company, so to speak, and that it could be spread out amongst the multiple companies that you do have. So yes, you can apply for each LLC separately. You're just going to need to be disclosing that as well. They're going to be asking you for a list of all your affiliated or common owned businesses. Yeah, what about employees working from home, creating private space in their homes? We are setting up IP phones, desks, and internet. So this goes back to the rent under lease agreements and utilities for which service began before February 15th. If a lot of people are now going to work from home, right? There's new locations. If these utilities are now new because we're now working from home, or if we are now doing a home office rental reimbursement, you didn't have that in place before February 15th. You can't use it towards that purpose now. It's really, I have an office that I was working out of in 2019. I still have it today. I'm paying my rent. I'm still continuing that rent. So we need to be mindful that these are expenses that you were incurring before February 15th. And you can prove that you had those expenses before February 15th. So if it's a new, you never had rent before, you never had this IP phone or utility bill that you were paying before February 15th, but you are now, you can't necessarily get forgiveness on that. So what about if there was a raise during the time period from 2019 and 2020, do you take the average? Yeah, so in calculating the loan amount, you're going to be looking at the 2019. So here's some of the nuances. We're looking at the 2019 average salary and wages, but so how do I say this, completely clearly? 2019, you might have lower salary and wages than you do now because there was a wage. When you go to forgiveness, you might have the ability to be paying people more salary and wages, or paying yourself slightly more now than you were then, as long as it's under the 100,000, to potentially increase that forgiveness amount. So if you're paying that person more now during this 8-week period of time, that will be accounted for in what is potentially forgiven. So, you can't get more forgiven than what you took. So, that would be included is, yeah, that employee now is now at a higher weight. That should show up through this period and might impact how much is now forgiven going forward because you're at this higher pay rate. So that works. That can work. So there might be things that you look to potentially manage in terms of, if you're taking a low salary now, you have the same head count, or let's just say you take a low salary for part of the year and you give yourself a big bonus at the end of the year, which smooths out that average, you perhaps want to increase your salary that you're taking now over these next 8 weeks, or once you get that loan, to get more of that forgiven, versus somebody who takes a very low salary and gives them a big bonus at the end of the year. You might want to smooth that bonus out and include some of that higher comp now to get it forgiven, instead of waiting to the end of the year to give yourself that bigger bonus. from a tax planning standpoint. So there's definitely things to consider. Yes, so there's things to consider. Well, one last question, and you mentioned 2 forgiveness options, but both are on headcount. So total payroll doesn't matter. The payroll matters your payroll matters because you're going to figure out what you spent over that 8-week period of time, and what you spent over that 8-week period of time is then going to be impacted by your ratio of full-time employees now versus full-time employees during the testing period. So perhaps if your payroll is lower, partly due to reduced headcount or reduced pay, you might have less going out for salaries and wages over the 8 weeks period, and then you're getting that reduced because you didn't hire as many people back. So total payroll matters in one sense, but it also is impacted by the full-time employee headcount as well. So yeah, there's a lot of different moving pieces. Hopefully I answered. You still need to know what your total payroll is, and if your total pay, like in the average calculation going back to like last year, if I was at $33,000 now as of last year, and now I'm at $30,000, there's less payroll. But perhaps there might be higher payroll for some reason because you hired people back, or you increased your payroll and are still below that $100,000. So the total payroll does matter. And if you've reduced your employees, if you kept an employee here, that's part of your 5, but their payroll then was reduced by 25%, they're not counted. Even though you spent the money on them, they're not counted. So that's going to reduce the amount forgiven. Now there was only going to be 4 of 6. So I know a lot to digest, a lot of different moving parts. I think the most important thing that you should be doing today is mapping out your options, getting in touch with your banker, even though most of this will probably be done online, getting your numbers organized, going through your QuickBooks, figuring out what your loan amount, what your payroll amounts are. And so you're ready to do that application. And then, on this link, which I can share, you can look through this sample application to see exactly what you need to be prepared to answer. So here's the sample application. If you're still, that's the SBA one. Here you go. The Paycheck Protection application. What are you going to use the money for? Payroll, rent, utilities, other. Your average monthly payroll, 60,000 times 2.5 equals your loan amount. List any 20% ownership. If you have business partners, put them all on here. You got to answer a few questions. You got to answer a few questions. It's not a crazy application. You got to make some certifications. Current economic uncertainty makes this loan request necessary. So this is just a sample application. You can see it's pretty quick, 2 pages. But I would just be prepared with all of your financial data, your prior year tax returns, your payroll reports. Just start getting organized so that you can be prepared to hit this tomorrow. So thank you for spending the time here, asking questions. We appreciate it. I know a lot of moving parts. Feel free to reach out to me. I'll get this recorded and loaded up so you can share it with whomever you want. Yeah, I know this is a tough time for all of us and many of us. So I'm glad we're all in this together, and thanks for joining. So best of luck, and please don't hesitate to use us as a resource. Have a great one.